It's Thursday, April 10th. Let's level up. Market pulled back today. We had talked about the market rallying up to the 50% fib and to the breakdown point, and seeing a pullback was very likely, and of course it happened. VIX didn't make a new high today. I have an alert below the two-day low here at 31.89, and I think if the bulls can get priced back below there, we could see some type of a rally still higher. If not, the chances for chop liquidation break potential in the major market indices still remains. Tomorrow, Friday, believe it or not, we start earnings season. We are going to start with the banks, and that will probably shade the color for the day because they report in the morning. JP Morgan is obviously the most important one to pay attention to, particularly their guidance, or maybe lack thereof. As far as futures go, we repaired the rich closes from the prior sessions. I had told you it was very likely that we would check back to 5,200 to 5,150, and we did exactly that. We held the 200 MA 30-minute, and we are currently trading above the downtrend from today's range. Bulls generally need to hold the 5,200-ish area. If not, they'll slip down to that 5,150-ish area, and then that becomes very critical. For me, I really do need to see the bulls get over 55.3375. And the Qs, that's 18,976.75. They also pulled back. They repaired the rich close to 17,926.5 and bounced. Bounce has been a little bit meek. Generally here, if you want to have a pass, don't pass line, 18,361.5. I think is a good short-term area to use. Futures came into this being very young. I've been relying more on SPY. Interesting where SPY closed today. It closed right basically on the prior session's VWAP. So that was 524.28, and we closed today at 524.58. You can't make this stuff up. I have an alert over the high of day at 533.51 because at that point all the shorts from today would be wrong. I think we'd probably come back up closer to that 549, 550 level. If we do lose the low of day and sustain below 509.32, we could be coming back down into the 493s and maybe even a retest to the 480s. As far as Qs go, they closed slightly above the prior session's VWAP. Of course, that VWAP was 443.70, and we closed today at 446.18. Similar setup there. Bulls will need to get over the high of day at 455.59. If they do, they can see the 466.43. And I've told you 466.33 to 471.60 was likely going to be some resistance. I believe it still will be because that is the primary downtrend line right there. And it's also the 50% fib of the range, that 471.60. If the bulls can clear that, I think they make the run to 487.93, which is the 61.8 of the range, and probably the 200 MA wherever it is at the time. Currently 493.18 and falling. We're about to see a death cross over there. You'll probably hear a lot about that on TV. As far as Apple goes, we had that big rebound after we filled the 5-2 gap at 173.03. I told you I thought the 200 area level was likely a good sale, and it wound up being exactly that. If you're still long and you didn't book profits and you weren't taking the advice that I gave, below 183 is probably a good stop. That was today's low of day. Above high of day at 194.78 probably does check back to those 200s and maybe even makes a run at the 10 MA at 202.18 and possibly even the 20 MA, which is the primary resistance closer to the 209.97 level and falling. 208.42 was a key pass don't pass line for a while, so I'd be peppering out orders between 208s and 210s if we were to get up there. If you're in calls, I'd be selling maybe the 219 against whatever you're long here. As far as Nvidia goes, pretty decent day, but still below the 38.2 of the range, which isn't good. Bulls there will need to clear the 20 MA at 111.41. If they do that, I think they could see the 50 MA at 119.35. 119.88 is the 50% fib. If we do clear that 20 MA, that's where I think we'd likely go. Generally here, if you want to own this cheaper and you want to do it, be it out of the money short puts, I don't mind doing something between 75 and 70 as a lower strike. You want to play for the down move, maybe buy a higher put and then sell 2 times out of the money. You could take the 1x1, cover that, leave the overwrite on, and then when the rally happens, assuming it does, you could take the overwrite off. Keep that size manageable because that overwrite will feel very painful until you do see the rally. For those of you who don't have the stomach for this stuff, just maybe sidestep that type of a trade. I've been using them quite successfully. I did get burned a little bit in SPY with that big move recently, but I have been able to mitigate it with some measures because I have the experience to do it. I've walked you through that, being able to roll up and roll down strikes, and also being able to sell countermeasures against it, like calls, and then taking the opportunity to row the range, meaning I booked something yesterday near the highs, I could always re-put it out again here down near closer to the lows. I've told you before, I think that there is the potential for a leg still lower In the case of SPY, that would be somewhere between 449 and 440. In the case of the Qs, that would be closer to the 346s. So if you want to do some type of a put spread as a hedge, those are good lower strikes. If you want to do a 1x2 playing for that, I'm good with that as well, because I do believe that that could be the area where the correction really does finally end. I think it's interesting here that all the analysts at the highs weren't downgrading, and now down here near the lows with the VIX in the 60s, they're all rushing and tripping over themselves to downgrade their growth estimates and earnings estimates and market estimates. It's sort of a joke. I spent my car ride tonight explaining to my mom about look above and fail scenarios. She was asking me about the bond situation. It's being accredited by Charlie Gasparino, who I think is a pretty good, honest reporter, to Japanese selling of treasuries. Basically, I had told you we had the look above and fail of the 93.27 and the 200 MA, so we're coming back down to range low. It makes totally perfect sense technically. TV shows and financial networks have to fill up airtime, so they're talking about the basis trade. You'll never hear about the look above and fail scenario, but you will hear it from me. As far as TLT goes, I would feel better with it over the 50 MA, but down here in the lower to mid 80s, I'm comfortable reloading and doing the time warp again. Longer dated though, because it may take some time to recover. Dollar's getting beaten up. You're hearing a lot about that. I'll tell you this though, like we had the look above and fail, there could be a look below and fail here in the dollar. Anything over 100.157 is a look below and fail, and prices may go higher. The candle here is 100.753. If we have a higher low in the coming sessions and then get over that, I do think that there will be a rally. Anything that does stay below 100.157, we could see still lower, and you'll start hearing about dollar losing reserve currency status. This is, of course, all nonsense. There's no currency that's liquid or deep enough, and it's used for treasuries and oil, and that will not change for quite some time. I do, however, think that a lower dollar will start attracting tourism. You'll start seeing Europeans coming to the United States and maybe even Asians. Gold has been a very, very bullish. We got very, very close to my 2.618 target at 292.62. We're actually trading well above it here in the after hours. Got 292.86 in the after hour, in the RT8 session, and 292.62 is the 61.8. I'm sure people are going to be bulling for 300 now. I would expect some sellers up there. It may overshoot it, but I would use the opportunity to book some gains. If you're already long GLD, maybe sell same day expiration 300s, or maybe go out to the next week, but do trim some there, and I would use whatever the opening 5 or 15 minute low is as a nice stop on at least part of that trade. Risk manage on both sides, up and down. The Bitcoin catching a bit of a bid here, but not over where it needs to. We're still in the downtrend. It needs to clear the 20 MA at 83,820. It's holding around the 200 MA here. If you want to be along against that, at 78,870, I'm good with that as well. Generally speaking, we have bank earnings in the morning. That is probably going to color the trade of tomorrow, at least the morning trade, but I do think that that could color the entire day. Next week, Giorgia Meloni, the PM from Italy, is going to be coming to the United States. She is basically like the Italian Trump. I am expecting them to come to a good deal. They are pals, part of the same MAGA type movement. She's like the Make Italy Great Again type of a movement, very conservative. So I think that they will come to a deal. She is actually bucking the EU and coming here to do that. And I think if one falls, they'll all fall. I expect the EU to come to terms with the United States because they will have to, particularly being parts of NATO and Putin right on their door being aggressive in Ukraine. I do think that Canada and Mexico will come to terms as well, and I expect part of these deals to include them being negative toward China, doing less trade with China and more trade with the United States. China, I do think, is going to be a little bit tough, but I do think that President Trump is going to be meeting with Xi in June somewhere in the Emirates, or in one of the Arabic countries. I don't know the exact date or the details of that, but I'll look into it. I do think that the market will feel comfortable once we start seeing some of these deals come to fruition. The extension of the 90 days could go out even further as long as there's good faith efforts being made by these countries. The 10% across the board tariff, I think the president wanted to implement anyway, and the best way to implement a 10% tariff is you tell someone you're going to tariff them 30%, and then the 10% doesn't feel so bad. Supposedly 75 countries want to make deals. I believe that Vietnam is already on the way here, and I think that there will be a deal done with them pretty quickly. I think that once you start seeing these deals rolling, the media and out of the markets will subside. You'll see the VIX retrench a bit here. I still like using the opportunity here to sell some out of the money premium. If you've got the huevos, rancheros, and account size to do it, maybe sell some strangles, meaning upside out of the money calls and downside out of the money puts. Or if you want to cap it off, maybe iron condors, selling bear call spreads and selling bull put spreads. I do think that there is the potential for still a leg lower in the markets. At least shorter term, I think it's going to be sideways. The good news, though, is that we're starting to get through earnings season here. If we get through tax season, the selling to raise money for taxes will alleviate. We're not through that completely yet, and it's even up till the day of taxes, believe it or not. I've noticed that in the past couple of years. But we'll also be through the earnings season buyback blackout, and companies can start buying back their stocks. If anything, here, I think that the SEC should be alleviating some of that pressure here with the movement in the stocks. They have made this exception before, and maybe start allowing companies to buy back their shares before they report. Like and follow for more.